Welcome back to the channel today. We're diving into the shifting tides of the markets where futures reflect the ebb and flow of investor sentiment. As we speak, the S&P 500 and Nasdaq 100 futures show slight gains, stirring optimism ahead of a week packed with significant events that could sway the financial landscape. On Monday morning, U.S. stock futures presented a mixed picture. The Dow Jones is slightly lower, trailing by 30 points, representing a cautious stance among investors. Meanwhile, the S&P 500 and Nasdaq 100 futures climbed by 10 and 40 points respectively, illustrating a nuanced confidence as traders digest economic signals and prepare for impending announcements. The uncertainty surrounding these futures captures the essence of the market's current atmosphere, teetering between optimism and trepidation. Amidst this backdrop, the impending U.S. presidential election looms large, just one day away. The candidates are neck and neck, rallying voters in pivotal battleground states. This nail-biting scenario amplifies market volatility, as traders anticipate that the election results could reshape the political and economic landscape. Many market participants are keeping a close watch on potential policy shifts that either candidate could usher in, prompting a careful analysis of how these changes might impact corporate profits and economic growth. In addition to the election, the week promises an influx of corporate earnings reports, with major corporations poised to reveal their quarterly results. Investors are eager to glean insights into individual performances that could influence market trajectories. Coupled with this are the heightened expectations surrounding the Federal Reserve's upcoming policy decision on interest rates, scheduled for Thursday. This crucial announcement is expected to shape monetary policy moving forward, influencing borrowing costs and overall economic activity. As Wall Street navigates through these various currents, recent performance gives a glimmer of hope. Last week saw the major averages closing in the green, largely buoyed by positive earnings at Amazon, despite a dismal job growth report. This highlights the resilience of equity markets in the face of adverse economic indicators, as traders remain focused on corporate performance and macroeconomic developments. As we press on, the interplay between political events and economic signals will undoubtedly keep investors on their toes and shape market dynamics in the days to come. The financial world holds its breath as the Federal Reserve approaches its highly anticipated two-day policy meeting. With expectations swirling, many foresee a 25 basis point interest rate cut emerging from the gathering. This follows the bold move in September, when the Fed opted for a significant 50 basis point reduction, a decision that reverberated through the markets. The backdrop for this meeting is punctuated by the latest non-farm payrolls report, which solidifies the notion of a more tempered monetary approach. As revisions for jobs growth in the preceding months signal a gradual cooling of the labor market, investors find themselves eagerly searching for indicators of the Fed's next steps. All eyes will be on Chair Jerome Powell, as he navigates the delicate balance between economic resilience and the necessity for cautious rate adjustments. Will he offer clarity on the trajectory of rate cuts, or will he remain vague, hinting at a commitment to be data-dependent? Analysts at Morgan Stanley suggest a nuanced response is likely, forecasting that Powell may refrain from locking the Fed into a specific pace or magnitude of future cuts. As the meeting unfolds, participants and observers alike are left pondering the broader implications of these monetary policy decisions. With the landscape of economic indicators shifting, each word from the Fed holds the power to influence markets and shape expectations. The financial community awaits the outcome with a mix of anticipation and caution, ready to adapt to the Fed's behavior. On Monday, oil prices experienced a notable rise, signaling resilience despite previous market fluctuations. The Brent crude contract surged by 21%, reaching $7,460 per barrel, while U.S. crude futures, commonly referred to as WTI, climbed 23% to touch $7,106 a barrel. This uptick comes on the heels of a pivotal announcement from OPEC+, the coalition of oil-producing nations, which decided to postpone a planned output increase originally set for December. The recent decision to delay the output hike of 180,000 barrels per day underscores OPEC+'s cautious approach in light of shifting demand dynamics. This marks the second consecutive month the alliance has extended its existing production cuts of 2 million barrels per day, reflecting growing concerns among member countries regarding the health of global oil demand. With recent weak demand figures casting shadows over market stability, OPEC Plus appears to be prioritizing price stabilization over increased production. adding complexity to the situation. Last week's trading data revealed that both the Brent and WTI contracts had experienced declines exceeding 3%. This downturn was largely attributed to record-high production levels in the United States, which has intensified worries about oversupply amid tepid demand. The global oil landscape remains a fluid one, where the interplay of supply decisions and demand realities will continue to influence price trajectories. As always, prudent investors should remain informed and agile in their strategies, especially in light of such significant market developments. At AlphaBridge Advisors, we empower investors with actionable insights and cutting-edge resources. Our mission is to bridge the knowledge gap, providing expert guidance on market analysis, investment strategies, and risk management. With unbiased research and tailored support, you'll make informed decisions and optimize your portfolio. Join our community today to access exclusive reports and strategic insights that keep you ahead in the dynamic investment landscape. With the U.S. presidential election just one day away, the political landscape is brimming with anticipation and tension. The race between the Republican candidate and the Democratic contender has become a dramatic contest, fueled by contrasting visions for the nation's future. As voters prepare to cast their ballots, every nuance, every rally, and every poll carries immense weight in shaping the outcome of this pivotal event. In the days leading up to the election, both candidates intensified their campaign efforts, traversing critical battleground states that could determine their fate. These regions, marked by a diverse electorate and shifting sentiments, have become focal points for delivering last-minute messages to undecided voters. The hum of campaign rallies reverberates through towns and cities as supporters gather, hopeful yet anxious about the prospects of their chosen candidate. Kamala Harris experienced a notable surge in momentum, particularly following a recent poll from Iowa, a state traditionally aligned with conservative values. To see her leading Donald Trump by 3 percentage points illuminated her increasing appeal, especially among women voters seeking a progressive vision. This boost provided a wave of optimism to her campaign, showcasing that even in areas where she was expected to struggle, new alliances were forming and support was steadily building. Yet the election remains a nail-biter, characterized by tight margins and razor-thin leads. Polling data reveals that Harris is experiencing marginal advantages in several key states, including Nevada, North Carolina, Georgia, and Wisconsin. However, her lead isn't comfortable. It's a fragile grasp. Polling in states like Pennsylvania and Michigan indicates a dead heat, with both candidates locked in a fierce battle for every vote. The significance of Arizona rings loudly in the backdrop, where Trump currently holds a slight edge. This state, often viewed as an indicator of broader national trends, could play a critical role in the outcome of the election. Voter turnout and engagement will be pivotal, as both campaigns scramble to galvanize their bases, ensuring every potential supporter understands the importance of their voice on this consequential day. As the election looms, the atmosphere is charged, marked by a sense of urgency and collective responsibility among voters. As citizens prepare to make their choices, they reflect on the visions and values presented by each candidate, knowing that tomorrow holds the potential to reshape the political landscape of the United States. In the financial world, the anticipation of earnings reports can create a ripple of excitement and anxiety among investors. This week, approximately a fifth of the companies within the S&P 500 are gearing up to reveal their latest quarterly earnings, shedding light on their financial health amid a complex economic landscape. This influx of information can influence market trends, guiding investors' decisions as they evaluate the success of their investments. As it stands, an impressive 70% of the S&P 500 has already reported, and among them, 3/4 exceeded analysts' expectations for per-share earnings. While this figure falls slightly below the 5-year average of 77%, it aligns with the more stable 10-year average of 75%. Investors are closely scrutinizing these numbers to gauge the overall market health, seeking insight into whether the optimism in certain sectors can sustain amid broader economic challenges. This week promises to be particularly significant, with major players set to announce their earnings. Supermicro Computer, renowned for its role in the burgeoning artificial intelligence sector, is in the spotlight, especially after a sharp decline in its share price following the resignation of its auditor. Additionally, heavyweight companies such as Qualcomm, Moderna, and CVS Health will share their financial updates. These reports could potentially sway investor sentiment, and adjust market dynamics as stakeholders react to the outcomes and outlooks presented.